Hello traders. Let's continue with this series of video about wave theory. In this video, we will discuss a flat correction. Talking about the wave theory, we must always remember that this is a theory. The reality of the market can be different from the theory. All right, this is very important because we don't want to use the wave theory like a science. This is very important for traders to remember all the time. And when we count a wave on a time frame, we must always validate the wave pattern from another time frame, or even comparing the wave count from one financial instrument to another financial instrument. We must always incorporate the trading triangle. So it's a theory, all right. The wave principle is a fractal principle, and also using the trading triangle, to make excellent decisions. Without that, we will use the wave theory, like a crazy traders. We don't want to do that. All right, very important. In this video, we want to concentrate on the flat correction. The formation of the flat correction is three wave, 5 wave. Repeat, 3, 3, 5. This is a flat correction. In the previous two videos that we have recorded talking about the zigzag pattern, we have the formation is 5, 3, 5. So the A corrective wave can be divided into 5 subwave, the B corrective wave can be divided into 3 wave, and the C corrective wave can be divided into 5 wave. The zigzag pattern, the formation is 5, 3, 5. If you have not watched the video that we call zigzag correction and also zigzag correction tips at www.24elliott.com, you may do so. All right. Now we're going to discuss what is a flat correction. The flat correction, the formation is all right. As I explained to you already, it's a 3, 3, 5. There are different types of flat correction. Now, do not forget wave theory. We're talking about a theory. All right, very important. In theory, it's 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. 3, 3, 5. This is the classic flat correction. When we are talking about flat correction, why is it flat? Because it's not deep. So it's just like a consolidation. Went down, returned back to the same place, went down to the same place. See, went up, went up. It's a consolidation section here. All right. Okay. All right. So that's why it's flat. Okay. But the important thing trader must remember when we are talking about the wave theory, it's a theory 3, 3, 5. A classic flat correction. Now, in the next video, we will talk about what is an expanded flat correction, what is a running flat correction, because these are what we call irregular flat correction. But you can go on the internet and learn about all this theory, but this is not the purpose of our website. Our website is to assist traders to understand the wave theory and also to simplify it and to make it accessible to all traders. Pay attention carefully. So first we must see, an impulsive move. An impulsive move is always formed up for 5 waves. 1, 2, 3, 4, 5. Okay. And then there is a correction which looks like a zigzag. So it's first went down, plus went down, plus went down. Okay. But here 1, 2, 3. Talking about a flat correction. Okay. So price corrected itself or with 3 move down. We think that a new cycle is going to begin here. But instead of having a new cycle completely to form what we call ABCD chart pattern, we didn't. We see again another ABC again. So this is what we call a double retracement. Correction and again correction. Now, normally we see an impulsive move, a correction, followed by another impulsive move. That's the normal progression of the market. So at this point we'll see an invitation to buy in the uptrend. That's probably rolling up. You understand traders that are using a cycle, a TSCWS is your 8. You have to understand the patterns. Now, so you buy here, all right, and the price going up. Okay, you think that In normal condition, that's why it's going to come to traders' mind. They say correction completed, three waves. The first thing coming to our mind after an impulsive wave, three waves is the first thing coming to our mind. So correction being completed, but there are different type of correction. But look, 1, 2, 3 again, another correction, and then it starts changing direction here. It's a double retracement. Now it's followed by 1, 2, 3, 4, 5. In a normal flat correction, the C corrective wave, though it's a 5 wave, will only go below the A corrective wave a little bit. This is very important. The C corrective wave of the normal flat correction, the classic flat correction, we just go just a little bit below. This is key point, a little bit below, or even exactly at the same place like the A correction, because this is A, B, C. The A be divided into 3, and the B D divided into 3 again, and the C be divided into 5. Remember, for the zigzag pattern, the A was divided into 5, the B was divided by 3, and the C was divided into 5. But for the normal, for the flat correction, the A is divided into 3, the B is divided into 3, and the C is the only one divided into 5. This is a typical flat correction after an up move, an impulsive move, a bullish impulsive move. In the case of a downtrend, there was a downtrend. So we see 1, 2, 3, forming the A corrective wave. Instead of having a new cycle, bearish cycle to the downside, we see again another correction. 1, 2, 3, forming the B corrective wave. Now we have the C corrective wave, which has been divided into 5 waves. 1, 2, 3, 4, 5. Okay. This is a flat correction. 3, 3, 5. Alright? That's 11 subwave. 3, 3, 5. 11 subwave. Remember, for the zigzag, we have a 13 subwave. 5, 3, 5. But we want to understand how the pattern is formed and where the pattern should form, and knowing exactly what is taking place. Aligning the theory with the reality of the market, using the trading triangle without forgetting that the wave pattern, a fractal pattern, one must validate the pattern instead of just using it, on its own. It takes time, but all right, it's simple. All right. So this is about a classic flat correction. It's a flat because the price did not go anywhere. It's just going horizontal. 1, 2, 3, 1, 2, 3 to the same place. But 1, 2, 3, 4, 5. But we didn't come out of the horizontal channel. Why did I say to the traders? When one is trading or about to make an investment decision, one must always pay attention to the market patterns. There are only 3 market patterns: the horizontal channel, the rising channel, and the declining channel. That's it. Now, if you see anybody else saying something else to you or trying to mystify you with some complicated formula, run away. Now, you can quote me on that, okay? Because trading is very simple. One will buy if the asset is still a high quality at a low price, and one will sell if the quality is poor but the price is too high. But the timing is the most important point. Aligning the markets and checking the fundamentals to make excellent decisions, that's the most important thing. All right. So during the flat correction, the price is going horizontal. You see. So we want to know. So this is a classic flat correction. But there are different type of flat corrections. I said to you, the expanded flat correction and also the running flat correction. All right. Below here, I have the chart of Profizia, a very interesting stock that we are watching now. As you can see, the prior there was a bullish cycle, a bullish trend. Okay, you can see it went up to this level. In fact, we talked about this already in other video that we titled Wave Trading Educations at youtube.com/24 Elliott Wave. So, but today we are concentrating on the formation of a flat correction. So there was a bullish trend. If you look carefully here, I'm going to remove the blue line, and I will also try to zoom into the price, bring it back. Okay, hold on a second, gentlemen. All right, instead, I'm going to zoom into the price a little bit so you can see. Okay, so the bullish cycle, as you can see, it went up all the way up to 2000. You remember this is 2000 here. I talked about this already. But I want from 19. You see this session here. There was a correction during that time. This is the tech bubbles. Okay, you see the price went down here. Okay, into 3 waves. It's a flat correction. But this is not a classic flat correction. This is an expanded flat correction, which we will discuss in the next video. Are you with me? Okay, so you went down 1, 2, 3. Yes, after a bullish trend. This is the normal. This is where we see very often. Okay, a flat correction. The flat correction. There are more to it, which we're going to talk about now. And again, 1, 2, 3 here. Are you with me? All right. So as you can see, there was a bullish trend. And then we have 1, 2, 3 for Pufizia. We are now on the monthly chart. And then 1, 2, 3 again. All right. You see now? 1, 2, 3. 1, 2, 3. The price is still in the horizontal channel. Yes or no? Remember the pattern is horizontal channel. Market pattern first before anything else. Alright, you see the horizontal channel, yes or no? You see? 1, 2, 3, 1, 2, 3. But in this scenario, we have what we call an expanded flat correction. Why is it an expanded flat correction? Okay, moment please. It is an expanded flat correction because the C corrective wave did not go just a little bit below the A corrective wave. It went too far. This is an expanded flat correction. So you can see this is the C corrective wave. 1, 2, 3, 4, 5. Too far away from the A. It's an expanded flat correction. If it was a classic flat correction, okay, as it was happening here, you can see that a lot of Elliott wave traders were expecting a classic flat correction. You see here, as the price came here, you see some traders start buying here. Why the price continue to move to the downside? The price will continue to move to the downside if the fundamentals are not sound. So, for instance, here, maybe the price from 5 here, and you're thinking to buy here because you think it's a flat correction. But if Pufizia is performing poorly, if the competition is weighing on Pufizia, if the market cycle, in fact, was bearish, all right, if there is a fundamental reason why no one should buy Pufizia or some litigation pending on the Pufizia, though you may see a classic flat correction which some traders were expecting here, you can see people traders were buying here, but the price went down more. In fact, one can say that, all right, that the expanded flat correction is an extension of a classic flat correction, because the classic flat correction 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5, but the price is in the horizontal channel for expanded correction. So here, what is happening? Why it's expanded? Because the fundamentals are not ready, okay, to support the buying here. So though people were buying here, okay, talking about the expanded flat correction, the second subway of the expanded flat correction, the fundamentals were not strong, so people continue to sell. Ordinary traders are using technical, they are buying, and smart money checking the fundamental and other issues, they know that they should continue to sell. And finally, it formed an expanded flat correction. Alright? I will continue with this video about expanded flat correction, but in this video, we were focusing on the classic flat correction, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Price, the correction remaining in a horizontal channel. The price will break out of the horizontal channel if the fundamentals are not sound, whether in the uptrend or the downtrend. So here in the downtrend, price went down. We see 1, 2, 3, 1, 2, 3. If at this point in time, normally trader will look for opportunity to sell. Here they will say that okay, here the pattern is completed. So they say 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. So what trader will look for? Technical Elliott wave trader will look for opportunity to sell here. Alright? But if the fundamentals were very strong, or suddenly they come out with excellent products, all right? And, okay, the market is very bullish. What's going to happen here? The price will not go down. People may try to sell it, which means what will happen instead, will have an expanded flat correction, which means people will sell it a little bit, price will come down a little bit, only to blast the bear out completely, forming, okay, an expanded flat correction. Price will come out of the horizontal market pattern, horizontal market pattern. Before I close this video, I hope you are paying attention. It's very important for trader to know, ordinary trader to know, because the professional know all this and they also understand it. And we are trying to tell ordinary trader to do exactly the same thing. And the professional will also respect you, because one thing that professional hates is that ordinary trader wasting their time and messing up also their trade. If the market is efficient, which means a lot of ordinary traders become more intelligent or understand more the market, a lot of more market participants will make money. But right now, only 10% of market participants are making money, and the majority of traders are losing because they do not understand many things that are happening in this messy market. All right? Before I close the video, the expanded flat correction takes place after a strong, okay, impulsive move. So if the trend you see here was very strong, you see we're almost vertical. So for traders who understand vertical move, retracement to the opposite diagonal, talking about other things. If the previous trend, if the motive wave is very, very strong, you are likely to see a flat correction. Because the market is very, very bullish. The stock has performed strongly. Everybody believes that, okay, Apple stock is the best stock in the world, or Google stock is the best stock in the world, and no one dare to sell it. Bears are scared to sell it. You are likely to see a flat correction. One thing traders should remember is that a flat correction very often will take place after a very, very strong trend. The second point trader must understand about the flat correction, sometimes the flat correction will precede a strong move. So instead of having a strong move before the flat correction, once we see the flat correction, we are likely to see a strong move. So a flat correction may happen after a strong move, or a flat correction may happen just before a strong move begins. So a flat correction sometimes, especially in a fourth wave, when we see a flat correction, especially the classic flat correction like this in horizontal, there's a high chance that the fifth wave will be extended. The first wave, the third wave, and the fifth wave can be extended. Now, when we see a classic flat correction in the fourth wave, and the fundamental and the market, you remember the theory and the reality of the market. Don't use it alone. Combining with Google Finance, Yahoo Finance, Bloomberg, Financial Times, dig it, investigate it, verify it, be cautious, and steadily look for low risk entry point. So in the fourth way, we see a flat correction, fundamental sound, market bullish. There's a high chance that the fifth way will be a stage cashing out. All right? The exhaustion gap will take place. You see that price gap in the fifth way? Gap and run fast. All right? So sometimes you may see the flat correction if the third wave is very, very strong, dynamic, bullish. Yeah? No one wants to see. One example I can give to trader that is likely to happen is the USD yen. You see how the first wave is extended. Trader talking about blah, blah, blah on the weekly chart as I was telling to traders. So because the first wave is very, very strong, we may end up seeing a flat correction also. All right? So the flat correction may happen after the third wave or after the first wave. All right? If the first wave is very, very strong, the second wave is likely to be a flat correction also. If the third wave is also very, because the third wave is normally the wave that is the longest in theory. So if the third wave is longest, vertical, you see here, vertical, sometimes it's like you are likely to see a flat correction. But generally speaking, the best place to see the flat correction is after a motive wave. Price display 5 wave, a bullish trend is completed, 1, 2, 3, 4, 5. Now a correction time has begun because the previous trade is very, very strong. All right, we are likely to see 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. For a normal flat correction, the price may stop just below the end of A. If it's expanded, you will move further down. If it was after a downtrend, like here, went down 1, 2, 3, 1, 2, 3, price may go up a bit during the C and hit the same level like A, or if it's extended, will prolong the move to display an expanded flat correction. Traders, this video is very important for traders to understand, and trader may replay this video and watch the full length of this video. Hard work pays if one is trading. Okay, very important. I hope you all learned something from this video, okay, about the classic flat correction, and will put into use, okay, to make excellent decision. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders. Speak to you soon.